You're listening to The Money Hour with your host, Tina Mitchell, on Alternative Talk 1150 AM. Now, back to the show with local mortgage expert, Tina Mitchell.
I love that. I have a fantastic show we have here. You're listening to the Money Hour at 1150 AM KKNW, the Saturday, October 29th Halloween show. You can also listen to my show on my show podcast, Facebook premiere, or catch my show on my show YouTube channel. I am your host and local mortgage expert, Tina Mitchell. I'm here to help you build a strong financial blueprint 1 week and one show at a time. If you're hearing my show at a different day, you are listening to a rebroadcast. I'm here to answer any questions or connect you with the guests that I have on the show today. Please call the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. And now in studio, Sandi Tampa of Windermere Real Estate East, Bellevue South. We're going to take a deep dive into our local real estate market right here on 1150 AM KKNW. Sandi, really excited to have you back in the show, and especially your expertise in what's happening in our shifting market. So Sandi, what is your answer when a client asks, is the sky falling?
Yeah, that's a great question. I sometimes will deadpan and say yes, but of course, no, it's not. So, you alluded to this earlier. I loved your conversation, your initial talk. So you stole a little bit of my thunder, but it's like in a very good way, but we'll look at it more on our local market. So we have a solid, so why this is so different than our last mortgage meltdown or the mortgage meltdown, that was fueled by predatory lending. And what we have right now is we have a solid base. We have tighter lending standards, and we have a huge base of equity. So that means that any kind of shift that the market's going to experience, it's got a stronger foundation. Then the basics are there. So the supply, we're still under housing starts, and then the amount of housing available isn't what it needs to be. We've for the last 15 years have been under what our average has been. Mm-hmm. And then most importantly, our demand. So our demand is huge, both just with our local economy, but millennials are bigger than the baby boomers, and the baby boomers are staying in their homes longer than they ever had. So we're solid.
Yeah, we absolutely are. When you see your real estate appreciation value dropping, no, it's not dropping year over year. Our appreciation is up. It's just not up as high, and we're losing some of that appreciation from that craziness again, which we talked about, which was not sustainable. And completely different than the financial meltdown and the Great Recession of 2008, just because of what you said, Sandi. We have equity. We don't have inventory, all of those things. That is the foundation for us to continue with our growth in the real estate market. So Sandi, what is your, can you give us an update on what you see happening with inventory?
Yes, you threw out some numbers from Lawrence. I don't know if that was from Lawrence Yoon, but so locally, our inventory is around 2 months of inventory, which is a balanced, slightly seller's advantage to balanced market, depending on who you ask. But in our area, that's true. But what happened was in April, we were at 0.31 months of inventory. So that is a 233% increase in inventory. So it's like we were going 200 miles an hour, which is what it felt like.
Yeah.
Now we're going 60 miles an hour, which is a reasonable speed. We'll get to where we need to be going, but it's dramatically different.
Yeah. So it feels like the sky is falling, but it's not, because we can't continue to go 200 miles an hour. And there was a lot of crashes that was happening at 200 miles an hour. Now we're at a safer speed that's sustainable to where we can get where we need to get safely. in our real estate future. So in a shift in the market may not seem good when the reality is best for everyone involved, owning or not owning real estate for our sustainable in the economy for sure. So Sandi, can you explain when you say months supply of inventory, is that the time that the sellers expect to sell?
Great question. It sure sounds like that.
Yeah.
So it's actually a nonsensical number. So it's how we take the pulse of the real estate market. But in its true meaning, it is if no more homes were to come on the market and buyers kept buying at the same pace that they are now, how long would it take for the inventory to run out? And that's never going to happen, right? That's a nonsensical number. But it's anything less than 2 months of inventory is a seller's market. 2 to 4 is a balanced market. Used to be that was still a seller's market, but not. We're kind of changing our wisdom on that.
Yeah.
And interestingly, so in King County in September, our average days on market was 28 days on market, which is still, big picture pretty low, but in April it was 7 days on the market on average.
Yeah. So again, it's the dramatic change. But when you educate somebody that we're actually in a seller's market, it's hard to understand. What, we're not in a seller's market. We're totally in a buyer's market, but we're not. It's just such a dramatic change from the craziness. And that's why there's so much opportunity now to take advantage of this market while we are seeing a shift. Still maybe not even considered a balanced market, but a seller's market. And definitely we have not hit a buyer's market based on the amount of inventory that we have before we would run out of homes. So Sandi, let's go ahead and talk about what's happening with buyer demand.
Yeah, so buyers are still out there. Interest rates are the highest that I've sold real estate with. They're about where I bought, but it was such a driver in how affordable things were, and so people could buy more home than they could previously. But what drives real estate is life changes. It's going to be marriages, divorces, having kids. And then there's still people who have the dream of home ownership. I've just got 2 new buyer clients who want to own a home, and interest rates it just is what it is.
Yeah, and it definitely has an impact when you consider every 1% in increase in rate is about 10% drop in buying power, so it does have a big impact. The positive on the other side is if we follow historical trends, which that's all we have to go off of. Anytime historically, when you hit a recession, mortgage interest rates go down dramatically. So this should be a short term. So why would you not wait until the interest rates go down? Is because when the interest rates go down, that buyer frenzy is going to come back because the inventory is going to continue to be a challenge. And then you're getting right back into that craziness and not being able to get your offer accepted. So that's why it's such a great opportunity. And, you hear a lot about the 2-1, buy downs with seller, which is what I educate my clients is because there is negotiating space for sure. So negotiate lower on the price, which I don't think is going to be the biggest benefit, but instead negotiate on having the seller buy down your rate. So take a look at the 2-1 buy down, or even better, just take a look at the lifetime buy down of the rate. So make sure that you're analyzing those numbers so you can see what's available and how you can actually get a substantially lower interest rate and have the seller pay for it versus lowering the price by 10 grand and maybe saving $50 a month in the mortgage payment. Would you agree with that, Sandi?
Well, yeah, preach. Exactly. These are points I was going to make later even. So it's exactly. Or, if we do expect rates to go up, there's the saying, date the rate, marry the house, yes. Right? So there's always the opportunity to refinance if rates dip down, and that's just going to be icing on the cake. But it's critical to be working and making sure that you can afford the payment. That is what it's all about, is that you live in the payment, not the price.
Yes, absolutely. So you don't want to do a 2-1 buy down with 100% confidence the rates are going to go down, and then you're not in a position to be able to afford that rate in the third year. So, yeah. So Sandi, let's talk about what's happening with prices.
Yes. So it's really interesting. So I live and work primarily on the east side, but I serve all of King County, and I've actually been working in Seattle a little bit more lately. But the east side has been a wild ride. We are down 22 median pricing, and pricing so hard to measure, right? It's just a very, very difficult, because you could have a bunch of high-end homes selling and then the low-end homes. So it's just a little tricky, but we're down 22% since April, which was the peak this year, which was up 11% since January. And an 11% rise in 4 months, I mean, that's just a good year, a year in real estate. So it's just been this roller coaster of ups and downs, but we have flattened. On the east side, we flattened out. In King County, we're just down 3% since January. So it hasn't been as dramatic for the whole county, which is a larger data set, which is probably telling the story more accurately. But it's what is going to happen. Tina, you mentioned that there's not year over year depreciation, and you're right. So on the east side, we're up 3% year over year. However, we are lower than what we were in October of 2021.
Yes.
So I know. So the media is going to whip everybody into a frenzy of depreciation, and we all just need to take a breath and stay calm. Everything's fine. The people who probably bought in those periods of time might feel like, oh, maybe I overpaid. You'll be fine. Stay there for 3 years. You'll be fine. And you probably have the lowest interest rate in history. And exactly. You can afford more house than you could. So
yeah, the sky is not falling. And I always bring media clips in here because it's so discouraging to hear the half truths or half information in what the media is sharing. And yeah, I've said it before, we'll continue to say it. You don't lose money in real estate unless you're forced to sell in a bad market and you're not reinvesting in another real estate asset at the same time. So value, as you said, it's what's on paper. And so unless you're looking at selling, real estate is always going to be a great investment over time. So Sandi, what can sellers expect in this market?
Yeah, sellers need to expect to have slow and timid buyers who are terrified about making a bad decision. And that's just where you've got to prepare and help them understand everything they can about the house, showcase the house, and then price it right, which is literally the $1 million question, but also a very tricky question to answer.
Yeah. So as a seller, putting your seller hat on, have some compassion for the buyer in that process. And because what you don't want to do is scare them and lose that opportunity for you and for them. Because I really believe, as we've talked about, it's going to be a missed opportunity for people. Just think if you were in the market before and there was 20, 30 offers on a home, hundreds of $1,000s over asking price, waiving finance contingency, maybe losing $100,000 earnest money or paying $100,000 over the appraised value because you had to waive that, or you just weren't the chosen offer over and over and over again. Now you're in the market. It is a whole different picture, which is the opportunity and the hidden opportunity, right, Sandi?
100%. Yes.
Yeah. So what advice do you have for sellers in addition to what we've talked about?
Yeah, I think it's just being patient, and pricing it right, and just paying attention to what's going on in the market and knowing when to react and when not to react. And that's hard. And that's just, you just have to have data and make data-driven decisions.
Absolutely. Well, Sandi, I had a couple more questions I wanted to answer. My time just went so quickly with you, and I just really appreciate you coming into studio. You are definitely an expert, and an expert based on the number of people that you actually help and close deals, which says a lot. So congratulations for your success, and thank you for all that you do for our local community and for being here to support my show and my listeners.
Thank you, Tina. My pleasure.